Last week, the market endured a brutal string of declines, with prices tumbling day after day, pulling many investors into negative year-to-date returns and shaking confidence across the board. Until Friday's session finally hinted at a potential turnaround with a glimmer of buying interest. In this episode, we'll explore strategies to stay disciplined and mindful when the market is in turmoil. Using this moment as a lesson, tune in to master the market's rhythm. The following are excerpts from Teaching You How to Trade, 108 Lessons, Lesson 41, No Rhythm, Only Death, originally written by Master Chan. No rhythm, only death. The rhythm of the market is singular. Buy at the buy entry, sell at the sell entry. It's that simple, yet how many can actually stick to it? What stops you from hearing the market's rhythm? Your greed and fear. Buy entries always form during a decline, but fear holds you back. Sell entries always emerge during a rise, but greed keeps you in. A person ruled by greed and fear has only one fate in the market: death. In the market, a stock at a buy entry is a good stock, and a stock at a sell entry is a bad stock. Any other classification of good or bad is nonsense. Your fate is in your own hands. No one is worthy of your trust, not even me. The only thing worth trusting is the market's beat, its rhythm, which you must listen to with your heart, a heart that has conquered greed and fear. The market's voice is always in the present. No matter how glorious someone's past in the current market, they're nothing. The moment greed or fear blocks your ability to hear the market, you're stepping through the gates of hell. Unless you snap out of it, all that awaits is death. Remember, 1,000,000,000,000 or 10,000, they both hit zero at the same speed, sometimes the former even faster. Buy at the buy entry. Buy entries only form in declines. No stock is worth chasing higher. If you chase and get bagged, you deserve it. Sell at the sell entry. No stock is worth panic selling. If you want to slim down your portfolio, get used to cutting losses. Even if you don't understand buy and sell entries, one thing you must grasp is this: never chase highs or dump lows. Even the Type 3 buy and sell entries form during pullbacks or rebounds. Where's the need to chase or panic? Buy and sell entries come in levels. When a larger level trend's energy hasn't run out, a buy or sell entry on shorter time intervals triggering a continuation of the bigger trend is perfectly normal. But if a buy or sell entry on shorter time intervals goes against the direction of a larger level trend that shows no signs of exhaustion, jumping in at those shorter intervals means risking the larger trend's continuation. That's licking blood off a knife's edge. The market doesn't need frequent trading. Beating the market requires accuracy, not frequency. Only brokers and tax collectors love high trading frequency. The market isn't a casino. Trading can be carefully strategized. When you enter a long position, ask yourself, is this a valid entry point? What type of entry is it? High time frame or low time frame? How's the broader trend shaping up? What's the current weave zone across different time frames? How's the overall market momentum? How's the sector this stock belongs to performing? The same logic applies to exit points. The more you analyze the stock's setup, the smoother your trades will flow. Judging buy and sell entries and improving their precision is a matter of theory and relentless practice. But this process and rhythm never change. Precision can improve, but rhythm can't falter. Rhythm trumps precision. No matter your skill at spotting buy and sell entries, even as a beginner, you must demand this rhythm of yourself. If you lack market intuition, force yourself to follow it or walk away. For beginners, avoid trades on shorter time intervals. Your precision in judging buy and sell entries isn't sharp yet. Using shorter time intervals and not screwing up would be a miracle. Start with 30-minute charts for entries and exits. Anything less than 5 minutes is off limits. If a 5-minute chart hasn't entered a divergent zone, don't trade. Shorter time intervals demand higher precision, and frequent mistakes from overtrading only ruin your mindset and stall your learning. Learn to stand before you walk. Running from the start? Impossible. Rhythm is eternal, embodied in the market's present rhythm. Anyone fighting it faces only pain and torment. Be warned, a so-called good mindset isn't about masochistically enduring the agony of missing the market's rhythm. That's a critical distinction. Many tough it out after messing up, thinking they'll steal themselves through it. That's dead wrong in the market. The market always offers a chance to recover, but only if you've still got fight left. Once you spot a rhythm mistake, the only right move is to sync back up. Miss the first buy or sell entry. There's a second. Miss the third, screwing up 3 times in a row? You deserve to flop. Why 3 types of buy and sell entries? The market's too kind. It gives you 3 shots to fix your mistakes. Can't correct after that? Take a break, sip some tea. 3 strikes, same error, and you're still not resting or sipping tea. What else is there to do? Those asking if a stock's still buyable after it's up N times, even chasing it higher, what's there to say? Can't spot a buy entry after a massive run? Watching retail traders bet on more limit ups after a straight climb, I'll say it bluntly. They deserve to get wrecked. The market is brutal. For those defying its rhythm, it's their graveyard. The market is beautiful, a Bach fugue, alive with rhythm. Rhythm is always the market's rhythm. A participant without rhythm faces endless torment. Cast aside your greed and fear, listen to the market's beat. When it's the weekend, drop everything, hear nature's rhythm, life's rhythm, music's rhythm, then return to hear the market's rhythm. Dance with the market, shed your greed and fear layer by layer, and you'll shine brighter than ever.
If you're interested in refining your entry points and targeting profit zones effectively, make sure to subscribe for more price action trade breakdowns.